Most people think they know why people buy silver. They think it's just about the price going up. They're wrong. When you own physical silver, not a paper ETF, not a mining stock, actual silver in your hands, you get a set of benefits that Wall Street, your bank, and the financial media almost never talk about. Some of these are legal, some are structural, some are just common sense that got buried under 50 years of just invest in the S&P 500 advice. I found 10 of them, and I'm going to go through all 10 today, starting with the one that genuinely shocked me. Let's go. Benefit, Portability 1. It owes nothing to anyone. This is the one most people don't think about until it's too late. Every financial asset you own, stocks, bonds, savings accounts, ETFs, is a promise. A stock is a promise that a company will perform. A bond is a promise that a borrower will repay. A bank account is a promise that the bank will give you your money when you ask for it. Physical silver is none of those things. It has no counterparty. It owes nothing to no one. There's no company behind it that can go bankrupt, no government that can freeze it, no bank that can fail and take it with them. When Lehman Brothers collapsed in 2008, billions in financial assets evaporated overnight. Physical silver holders? They woke up the next morning with exactly as many ounces as they went to sleep with. That's not nothing. In a world where counterparty risk is everywhere, owning something that has zero counterparty risk is genuinely rare. Benefit. 2. It's the most private asset you can legally own. Your bank knows exactly what you spend your money on. Your broker knows every stock you hold. The government can subpoena those records in hours. Physical silver bought in cash from a local coin shop is one of the last fully private, fully legal financial assets available to ordinary people. No broker account, no digital footprint, no third party holding it on your behalf. Now, I want to be clear, I'm not talking about hiding money or evading taxes. Silver sales are taxable and you should report them. What I'm talking about is the simple right to own an asset that doesn't require you to register with a financial institution just to hold it. In a world where every dollar you spend is tracked, that privacy has real value. Benefit. 3. Your entire wealth fits in a shoebox. This stack right here, 20 ounces of silver, is worth roughly $650 at today's prices. I can pick it up with one hand, I can put it in a bag, I can take it anywhere in the world. Now, think about what it takes to move $650,000 in real estate, or stocks, or cash through a bank wire. There are forms, fees, holding periods, currency conversion friction, foreign account reporting requirements. Silver crosses borders as jewelry. It moves with you when you move. It doesn't require a swift transfer or a notary or a 3-day settlement period. Portability is an underrated form of financial freedom, and silver has it in a way that almost no other asset does at this price point. Benefit 4. It keeps up with what things actually cost. Here's a fact that most people have heard but haven't really sat with. In 1964, the US quarter was made of 90% silver. That quarter contained about 0.18 troy ounces of silver. Today, that same silver content is worth over $5. Meanwhile, the paper quarter in your pocket, still worth 25 cents. The silver quarter bought a gallon of gas in 1964. That same silver quarter, melted down to its metal value today, still buys a gallon of gas. The paper quarter buys nothing close. That is what inflation protection actually means. Not, hopefully my investment goes up. It means the metal holds its purchasing power while the paper currency erodes. Over the last century, the dollar has lost over 96% of its purchasing power. Silver has not. Benefit. 5. Factories need it whether you want it or not. This is the benefit that separates silver from gold, and most people completely overlook it. Gold is almost entirely a monetary and jewelry metal. Its price is driven almost entirely by sentiment and investment demand. Silver is different. Silver is consumed by industry. It gets used up. Every solar panel manufactured requires silver. Every electric vehicle, every smartphone, every hospital. Silver is the best electrical conductor of any element on the periodic table. Industry can't replace it cheaply. That creates what's called a demand floor. Even if every investor in the world decided to sell their silver tomorrow, industrial buyers, solar manufacturers, EV companies, electronics producers would still be there bidding for it. Silver has a built-in buyer that gold simply does not have. That's a structural advantage most people. Buying silver don't even know they're getting benefit 6. It's the only precious metal most people can actually afford. Gold right now is trading above $3,000 an ounce. For most working people, buying even 1 ounce of gold is a significant financial decision. Silver is around $33 an ounce. You can start a meaningful precious metals position for $100. You can dollar cost average $50 a month and actually build something real over time. This matters because it means silver isn't just for the wealthy. It's not a rich person's hedge. It's the hedge that anyone with a little discipline can access. And historically, That accessibility has been part of what drives silver's demand. And when regular people start moving money out of depreciating currency and into hard assets, they reach for silver first, gold second. And that dynamic tends to push silver's price significantly. Benefit number 7, nobody takes a cut just for you owning it. Let me ask you something. How much did your mutual fund charge you last year just to hold your money? The average actively managed mutual fund charges between 0.5% and 1% per year in expense ratio fees. That doesn't sound like much, but on a $50,000 portfolio, that's $250 to $500 every single year, just for the privilege of letting someone else manage your money. Physical silver charges $0, annually, forever. Buy it, store it. No subscription, no expense ratio, no management fee, no advisory fee, no platform fee. The only ongoing cost is your storage solution, a safe or a safety deposit box. One-time cost, done. Over 20 years, that fee difference compounds significantly. The money that would have gone to fund managers stays in your stack. Benefit number 8. It's accepted everywhere when nothing else is. I want to be careful here because I'm not a doomsday prepper. I'm not telling you to build a bunker. But I am going to tell you something that history proves over and over again. In every financial crisis, every currency collapse, every period of severe economic disruption in recorded history, precious metals have functioned as a medium of exchange when paper currency failed. Weimar Germany, Zimbabwe, Venezuela, Argentina just recently. In every one of these situations, silver and gold circulated as real money when the national currency became worthless. I hope you never need this benefit. I genuinely do. But having 10 or 20 or 50 ounces of silver as a financial emergency backstop on top of your regular emergency fund is one of the most logical risk management decisions a person can make. It's insurance you can sell when you don't need it anymore. Benefit number 9, it tells you when to move between metals. This one's more advanced, but it's one of the most powerful tools in precious metals investing, and almost no one outside the stacking community knows it exists. The gold to silver ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. Right now, that ratio is around 88 to 1. Historically, it has averaged closer to 50 to 1, and at times has dropped to 30 to 1. Here's how smart stackers use this. When the ratio is high, like it is now, silver is historically cheap relative to gold. You accumulate silver. When the ratio drops toward 50 or below, silver has caught up to gold in relative terms. You trade silver for gold, ounce for ounce. Your ounce count stays the same or grows, but you're now holding gold. When gold gets expensive relative to silver again, you trade back. Done correctly, this ratio trade can grow your total ounces of precious metals over time without spending another dollar. That's a trading strategy built into the structure of the metals themselves. It exists nowhere else. Benefit number 10, the floor is the metal itself. I've saved this for last because I think it's the most important and the most underrated. Silver cannot go to zero. Think about how unusual that is in the modern financial world. Stocks can go to zero, companies go bankrupt every day, bonds can default, crypto can go to zero. It's happened to hundreds of coins. Even cash can effectively go to zero through hyperinflation. Physical silver cannot, because below any investor-driven price, there is industrial demand, and below that, there's the simple physical reality of the metal itself. If silver dropped to $1 an ounce, industrial buyers would buy every single ounce available immediately. The floor is structural, not psychological. When you own silver, you own something with a genuine, hard lower bound on its value. In a world full of assets that can evaporate, that's not nothing. That's actually everything. So there you have it. 10 benefits of owning physical silver that most people have never heard of, let alone thought about. No counterparty risk, privacy, portability, inflation protection, industrial demand floor, accessibility, zero management fees, crisis liquidity, the ratio trade, and the fact that it simply cannot go to zero. Now I want to know which one surprised you the most. Drop it in the comments. I read every single one. And if you want to see exactly how I built my own silver position, starting with just $5,000, that full breakdown is right here. Subscribe if you want more of this. No hype, no price predictions. Just the honest researched case for silver that the mainstream won't give you. I'll see you in the next one.